In terms of what's happening with the benchmark indices, it's a day of strong gains and strong momentum is what we are looking at. Nifty 50 being up around 1.25% currently, and this is at the back of the GST rationalization in terms of the slab rates that we are looking at playing into effect over here. In fact, if we look at the mid cap and the small cap 250 also mirroring some of these moves that we are seeing in the benchmark indices as well. But what's specifically happening in the small cap space? And to just talk about that, we have Somit standing by to give us a detailed breakdown in stocks in focus in this particular site.
Well, yes, multiple stocks in the small cap space have been buzzing specifically on the back of the potential GST rate cut. To highlight few, firstly, if you look at its electronic marts, India, Stovecraft and Virtuoso Optoelectronics, which have been gaining in trade on the back of an expected potential cut in the GST rate that could come in for AC, 32-inch, more than 32-inch TV and dishwashers. This rate can be cut from 28 to 18%. For FIEM Industries, Lumax Industries and Talbras Auto, these companies are expected to be one of the indirect beneficiaries of a rate cut that could come in on the auto segment. Now, for auto segment, the rate cut is expected to be from around 28% to 18% for two-wheelers specifically, which are less than 250 cc's, and for four-wheelers, which are less than 1.2-liter engine. Apart from that, there could be a tractor segment rate cut as well, GST rate cut from 12 to 5%. For other segments, if you look at its SP apparels and Kitex garment, which is also buzzing in trade, and largely this is on the back of a GST rate cut that could happen in the apparel space, which is more than 1,000 rupees worth. This rate cut could come down from 12 to 5%, and that's the reason SP apparels and Kitex garment is buzzing. When it comes to the cement sector, it's Sri Digvijay Cement, Andhra Cement and Saga Cement, which have been buzzing on the back of a potential rate cut from 28 to 18%. Now, this could reduce the cement prices anywhere from 30 to 40 rupees per bag, and generally this won't change the demand because demand is generally inelastic when it comes to the cement sector. But this GST price cut could give cement companies the headroom to increase or take price hikes at a later stage, and hence these companies have been buzzing. Apart from that, if you look at Kamath Hotels, that stock has been buzzing in trade because their average room rent is below 7,500, and that is a segment where Street is expecting a GST rate cut to happen from 12 to 5%. For room rents where the per night stay cost is less than 7,500. And lastly, if you look at Parag Milk, in fact, the entire dairy space is buzzing, but in small cap, it's Parag Milk, and this company could benefit if there's a GST rate cut from 12 to 5% on dairy products. So these are all the specific small cap stocks that have been buzzing in trade on the back of potential expected GST rate cuts.
Thank you for that, Somit. So that's a detailed list in terms of, some of these buzzers that we are looking at. But to talk to us about that, we are joined in by Sameer Dalal from Natwarlal and Sons Stockbrokers. Sameer, welcome to the show, first of all. So Somit spoke about, variety of sectors in focus on the back of this GST rationalization that we are looking at. Any of these names that you found interesting, say, whether in the consumer durables, consumer electronics, or other sectors that he was talking about?
Yeah, hi. So let's talk about first the GST rate cut and then you'll come to the stock prices, right? So the first thing I want to say about the GST rate cut is that I wish it hadn't been announced before the actual GST cut happened, for the simple reason that what will happen in the short term is anyone who's looking to make certain purchases now may delay their purchases by a month, month and a half till the rate cut comes through and then make the purchase. So what happens is Q2 for some of these companies may become a washout to a large extent because the sales get pushed back, right? So that I think is one thing which the market is not penning in at the moment, is the fact that some of these consumer products will see a delay, whether it's ACs, fridges, whether it's automobiles, because if I'm getting a cost saving, I might as well wait for a month and take that cost saving, right? So that one slight negative is there. Now, the second point which I want to come to when it comes to GST, GST rate cut, which is there, I'm all for it. I think it's a great move from the government of India because actually what it does is, post-tax paid money, which people have left in their hand, they are paying a lesser amount of tax on it when they consume. So that definitely is a benefit for people, but that not necessarily leads to increased consumption. Let me just give you a point in example that, we've had the tax slabs where up to 12 lakhs, there is now no tax. And we were very, very hopeful at the initial stages that this will lead to a great amount of consumption activity picking up. But unfortunately, that hasn't seemed to happen. What seems to have happened is people have increased their savings, because if you see the SIP numbers have gone up, obviously it's not directly proportionate to what the tax cuts are, but obviously some amount of savings have increased and consumption hasn't increased. So a GST cut also need not mean that consumption increases. Today, if I'm going to buy one car, I'm still going to buy one car. I'm not going to buy a second car because the GST has come down. Similar with AC, similar with many other products, right? So it's not necessary. If I'm going to make one holiday, it's not necessary that I make a second holiday. So all of these things need not lead to a consumption growth. What it does definitely do is it allows companies to probably increase a little bit of pricing, and still have a price cut on the eventual product, allowing them to increase some margin. So that profitability will come, but that will only start factoring in from Q3 onwards. So the first negative which I mentioned is the short term looks a little dicey. Second, the long term we think is positive, but that is also given that all the states agree to the cuts, right? It's actually the state and the center that have to come in agreement and then pass the GST amendment. So we have to hope that all of this happens in September and it's just not a lot of talk and then eventually doesn't follow through. So positives are there, but I don't think I don't think, I mean, the reaction of the market probably is far more than what the actual benefits that are going to come through in the short term.
Very interesting view,
And
Amitya.
coming to stocks that we discussed, coming to some stocks that you actually asked me, so I think some of these counters will do well going forward, because obviously affordability may increase and a little bit of a push may come through, but valuations across the board are quite high at the moment when it comes to even auto, when it comes to even your FMCG product, I'm not FMCG, your discretionary products, especially when it comes to electronics. So at the moment, I'm not going to be out in a rush to recommend. So one of the counters that your speaker mentioned was EMIL, which sells products across the board. If consumption increases, companies like that obviously stand to benefit because SSSG comes through, electronic mart that is. And if that comes through and they increase their sales, the operating leverage is quite strong in that business. So that could do well. We continue to remain very positive on QSR, consumer discretionaries like shoes, like clothing, so Trent, all of these. So we are hopeful that SSSG picks up, but I think that might be now a quarter down the road. So we need to see exactly what comes out and how it plays out. And I think market's probably running too far ahead of what should actually happen.